You guys know how attached I am to daily charts, but I saw this weekly triangle winding up and I just couldn't resist it. I'm going to show you how to handle it. Hi, this is Tim from TradingStrategyGuides.com. Well, the thunderstorms are gone and it's beautifully sunny in northeast Texas right now, if not a little bit chilly, at least by our standards. I know the guys up at Trading Strategy Guides in Pennsylvania laugh at our very cold 32-degree weather here in Texas, but then they complain about the heat when it hits 80 degrees, so that's when we get to laugh. It all just comes full cycle, I suppose. I've got a really big consolidation happening on a weekly chart on a Forex pair that I almost never trade, but when I saw this pattern I had to add it to my watch list. It's really no secret. This is on the US dollar Mexican peso Forex pair, and it's a weekly signal. I'll show you what to do with that shortly. First we'll look at open and about to trigger trades and the factoid of the day. I know it's been a couple of minutes since we've done one of those. Then we'll look at the US Mexican trade and the trading maxim for the day. Get some coffee and hang out with me for a few minutes. Remember to click the subscribe button and hit that bell so you don't miss any of these awesome Forex setups. Okay, let's talk about the open trades and the trades that are about to trigger. The S&P 500 is moving up pretty nicely right now. Just about 10 bucks off of our first target. Could hit that today. Too bad it's only half size, but that's how it goes sometimes. As I mentioned in Wednesday's video, Kohl's Corp opened above the range level of 54 on Monday and then closed back inside the range. And I mentioned that if the volume and volatility continued to drop, that I would move this range line up. So they have continued to drop right here, and I am moving the range up to 54.28. So watch for this thing to close above that to buy. US dollar Japanese yen is attacking the bottom of the bear flag right now. We talked about this early last month. So this is a heads up to watch for a daily close below with sufficient volume to go short. And American Micro Devices, AMD, is pushing above the range today, so watch this for a close with sufficient volume to buy. Alright, I hope you guys are ready for another factoid of the day. It's been a little while, but I think it's going to be pretty interesting today. Well folks, Amazon's at it again. I believe they want to own the whole world. Well, it could happen if they continue to pump out products that everyone wants. I know I spend a lot of money with Amazon every month, and this may be the next thing that interests me, except they probably won't be doing this in my small Texas town. Amazon's been in the food biz for some time now, scooping up the whole foods chain along the way. Now what? How about free 2-hour grocery delivery in more than 2,000 cities? Yep, the Amazon Fresh option is going wider, faster, and cheaper with more large brand items. It's available only for Prime members, of which I am one. So strictly speaking, it's not really free. But Prime is such a great deal at about $120 a year, and it includes streaming television service and free 2-day delivery on most items in their catalog, and even next-day delivery on some of them. But now Amazon will try to compete with a jammed market of folks with real brick-and-mortar presence in small towns. Most of our grocery shopping consists of either ordering online from Walmart and picking it up in their parking lot, or using Instacart to get delivery from several locations in our small town. I guess it's left to be seen how Amazon does in this market, but if anyone can do it, I imagine it's Amazon. Hat tip to the hustle for this news nugget. I'll put all the links below. Today I'm going to show you guys this US dollar Mexican peso triangle on a weekly chart. You can handle this one several ways. I'll show you how I plan to do it, but I'll also show you a couple of other ways. This is a weekly chart of the US dollar Mexican peso. This pattern has been winding up since about July of 2018. Actually, you could probably make an argument that it's been winding up ever since this uptrend ended right here in January of 2017. I just like the look of it since July of 2018, especially since in early 2019 right here, the volume started to drop quite a bit. Now, I'll be trading this in a manner similar to my daily chart trades, but using weekly values instead. The only problem here is that our trade size will be about a third of the size of our daily chart because the weekly ATR is about 3 times the size of the daily ATR. This could be difficult on smaller accounts or accounts with lower leverage, so I'm going to show you how to trade this on a smaller account before I talk about how I'm going to handle this trade myself. You have a couple of options to use this triangle on a smaller account. Here's a daily chart of the pattern. The first option is to look for a daily close above or below the triangle. So this would be treating this as if it were a daily triangle. Using 1.5 daily ATRs for your stop loss and 1 daily ATR for your first target, and then sizing your trade accordingly. You'll also want to use daily volume numbers here as well. So you'll look for a daily close below the triangle or a daily close above the triangle, and you'll want to see the volume for that day reach the average volume or 75% of the average volume for your half size trade. You may end up getting a little in and out of the pattern doing this, since I consider this to be a weekly pattern. So you may end up taking some small losses before the big explosion happens. Or you may end up getting a lot of first targets and then stop outs on the second half, which wouldn't be too bad. Or the combination of those two things. This could actually be a pattern that you're in and out of several times before the big move. Now, if you'd prefer not to churn your account too much with a bunch of daily ins and outs, then you could watch for a weekly close outside this pattern. Here's the weekly chart again. Watch for a weekly close outside of this pattern and use the volume numbers as if you were taking a weekly trade, but then you would use the daily ATR numbers for your 1.5 ATR stop loss and your 1 times ATR target. And then you could stay in that until the stop is hit or until you get a weekly close back inside the pattern. So in other words, you're going to look for a weekly signal using the volume and the weekly bars, but use the daily ATR for targeting and stop loss. In any case, you'll be able to use a larger trade size because you'll be using a much smaller stop loss for your 1.5 times the daily ATR. Right now the daily ATR is around 1,278 pips and the weekly ATR is around 3,467 pips. Oh, and don't let those pip numbers scare you. The peso moves a lot for a small amount of value movement. Currently, the per pip value for a full 100,000 unit lot is around 52 cents. So it's about 20th of the value of most pairs. If you have any questions about either of these plans, post them in the comments below, and I'll either answer them in the comments or in the next video. Now, I personally prefer to trade the weekly chart using weekly signals and ATRs. So here's my plan. I will buy a weekly close above the triangle or sell a weekly close below the triangle. On the breaking candle, I'll look at the volume, and it needs to reach at least to the volume average here. If it doesn't reach the average but reaches at least 75% of the volume average, I'll take a half size position to reduce risk. You can calculate that by taking the volume, divide it by the volume average, and you should get 0.75. If you don't get at least 0.75, then stand aside on the trade. The stop loss will be 1.5 times the ATR, and the first target will be 1 times the ATR. So again, on the breaking candle, you will want to look over here at the ATR, multiply that by 1.5 times, and then put your stop behind your entry by that amount, and you'll put your target ahead of the entry by 1 ATR. If after entering the trade, we get a candle that closes back inside the range, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout from these patterns should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit, and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Now typically I do this with two positions. The first one has both the stop loss and the take profit attached to it, and the second position will have only a stop loss attached to it, so we can allow that one to run. I also only risk about 2% of my account on each trade, and that is the setup on the US dollar Mexican peso. I know I tell you this every single time, but I want to make sure that you remember I'm not trying to tell you what to do here. I'm just telling you how I handle these trades. If you want more details about what I do, look below this video for a link to my trade management video. And if you've developed a trade management plan that works better for you, by all means use it. Trading is a very personal thing. Things that work for me may not work for you. You have to understand your personal psychology to find the best strategies for your own trading. And psychology, of course, is, in my opinion, the most important part of trading. And the trading maxims are my way of handling my personal psychology. And today, we're going to dive into the archive. A maxim is a general truth, fundamental principle, a rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, we've got kind of a fun maxim that I wrote myself. And here you go, Tim's trading maxim number 6, there's no such thing as too much coffee. If someone ever tells you that you drink too much coffee, cut them out of your life. You don't need that kind of negativity. Tell me in the comments what your go-to drink is. I personally drink a lot of coffee and Gatorade Zero. Remember our US dollar and Mexican peso trade plan here. We're going to buy a weekly candle close above the triangle or sell a weekly candle close below the triangle. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR. Your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And we've got a whole lot of fun videos and fun trading picks and stuff, so make sure you don't miss them. Sign up for my free Trading Picks email list. I'll be sending out 3 or 4 trading picks a week, everything from stocks to futures to cryptos to Forex, and you'll be the first one to see them. And the best thing about it, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guides YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. We'll have a nice trade setup or two on each one and maybe some extra Q&A or training once in a while. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video or both. And remember, the only stupid question is the unasked one. And don't forget to comment below about your go-to drink. Tell your friends about us and help us make this the best trading channel on the internet. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great weekend, and I'll see you next time.